Alright guys, today is currently Wednesday the 22nd of May, and I just want to go over and give you guys a Forex strategy to use because I know it pains you guys to not know a strategy, especially if you're a new trader or experienced trader, whether you trade support resistance, trend lines, or SMC concepts, ICT. I'm just here because I want to relieve that stress, and I want to actually show you guys how to actually how to actually approach the markets using a simple strategy that I use consistently all the time. And what I do is I basically trade gaps and order blocks. I trade imbalance gaps specifically, or you can call them fair value gaps, and I trade order blocks. And so basically these are basically a form of supply and demand in the market, buying and selling, sell off, buy off, demand, supply. And what I do the first enter a trade is I see the trend to what I'm trading. So if I'm trading Australian US dollar, I have to understand that each pair has different rules because these pairs function differently. Like, for example, Australian US dollar, AUD USD. For AUD USD, you can use the 5-minute structure, but on other time frames or on other pairs, you can't use that. And so for here, you see how smooth and clean structure is on the 5-minute. And so before I got in that trade there, we had the price low here, and I'm just gonna put everything so you can see it. Those red lines I'm drawing. We had a low here, a high there, then we had a low there. Then we had a previous high here. In total, 4 pieces of structure confirming our trend. And after we had that low, that most recent low, we had price actually come down and leave behind an imbalance gap. So when the market is selling off or buying demand, sometimes when there's a lot of volatility, the market leaves these gaps because a healthy market goes up, down. But when there's a lot of volume, a lot of money in the market will just sometimes drop straight down, leaving behind these gaps that I trade. And so a lot of times these gaps will always get filled, like you see right here, how this wick right there on price, how that wick right there taps into that gray box where the arrow's pointed to. And then after that wick, that candlestick wick tapped into this gray box here, we had a major sell-off with all those black candles. These are basically the red candles. With all those red candles going down, black candles going down and selling off, breaking a new low because price, if you look at the arrow where it's pointed to now, broke that piece of structure with when it was selling off because we had all this red volume. And when it did that, it left another gap, just like the one you saw above. But not only did it do that, I saw an opportunity to trade this because, number one, I had a confluence. The confluences I had market structure. I had my trend. I knew the trend was bearish because I had lower highs, lower lows, as well as I had lower highs, lower lows, as well as high volume on the 1 hour. As you can see, the red volume sticking above all the green. So that's letting us know the volume basically shows us who's in the market. And so if you look at the red volume, it's only been the people that have been controlling it have been the people that have been selling off. So smart money. So these banks, institutions, hedge funds have been selling off, dominating the market recently, in the past, most recently. And because of that, why would I buy? And that's the whole point, because they control the market. So I don't really trade my own strategy with using any EAs or anything like that. I just follow supply and demand, because if you look at the volume is really the only indicator I use that you need, because volume shows, like I said, who's in the market, because the ones that control the market are the ones that have the most money, and the ones that have the most money are the ones that move the market significantly, like you see here, making it move downward. Because if retailers can't make the market move up like this, move down like this, they don't have enough money, and it wouldn't be enough volume, and especially enough volume to significantly show itself on the 15-minute, like here, like you can see here below, and on the higher time frames, like on the 1 hour. But yeah, guys, so I got into that trade, and that gap was on the 5-minute. Because usually the 5-minute is where I would take entries, not just on this pair, on the other pairs. And so I entered right there. We had this entry, and after that entry, Boom, came down all the way. And my stop loss basically was right here, above this hold on guys, sorry. Right there. And yeah, guys, that's all I do. So it's a simple strategy. So the first step you're going to want to write down is identify the trend / market structure. And the way you do it is go on your currency pair. And first thing, make sure there's actual news. Because today, the only reason I traded this is because there was US dollar news. That's the only reason that I decided to trade all USD. If there's no news for the pair, if there's no medium impact or high impact news for the pair, don't trade at all. Don't trade yellow news folders. Don't trade low impact news because you're not going to get enough movement to make trades like this. So only trade when there's high impact to medium impact news, and trade trade after the news. And if you can't trade after the news, and if you're confident, trade before the news. The only time you should trade before the news is when you're confident. So yeah, I just traded when I was there was US dollar news today, not Australian news. So I knew that there wasn't going to be any demand for Australian dollar, because if we zoom out on the 4 hour, we can see overall the Australian dollar is in a bullish trend, right? Because we have higher highs, higher lows. But the reason why I sold off instead of buy, because the Australian dollar, there is no news for the Australian dollar. And because there's no news for the Australian dollar, there's no demand significant enough for me to even want to. Would you place buys right here? Would you buy this pair? No, because there's no market structure showing you that we're going up besides on that higher time frame. And even though the higher time frame market structure shows that we're going up, you need confirmation on the lower time frame, which for me is a break of structure. Meaning I would need price right here, say this price right here, this is where it's at right now. I would need price right here to come up high and break these red pieces of structure on the left, on the upper left of the screen that you're looking at. I would need the price to come and break those highs, and when that happens, then it will leave behind gaps, just like you saw here with the red, just like I traded here with the gray boxes. You'll see all these gaps get left behind, but only on the white candles. But yeah, until I see a break of structure, we're still selling off. And so I might be able to actually get into another trade right here, either at this either at this supply zone right here, that order block, or I'm probably not, because I saw a gap on the higher time frame get filled on Australian dollar. So what I mean by that is right here. And remember, when we're selling high, and when we're buying low. We sell at premium prices, which mean expensive prices, and we buy at discount prices, which mean cheap prices. So this gray box that I'm drawing right now is a representation of buying at low, buying at a cheap price, because this gray box is at the lower part of the range of the overall general structure, which is in the long-term bullish. And so right now, we would be considered at a dip right now. And so that's also why I'm not buying, because price could easily react off of these levels on the higher time frame. And so I'm just going to wait and not trade this. And yeah, so that the key is, number one, market structure. Number one, news. Number two, market structure. And number three, you want to buy if your structure is bullish. If you're bullish, you want to look for either an imbalance gap or order block low. You want to buy at the dip. You want to buy cheap. And you see how I got into trade here when I'm selling? Because the trend was bearish. My entry right here, if you guys look, was high. Okay, it was high. And then it sold off. So you should be selling high. And what I mean by selling high specifically, when you have market structure, that is basically your range. So you see how those red lines represent a range? So let's look up here, for example. So if the market structure up here, right here, if we see the gray arrow, if the price up here came up to this point, that means it came up to balance out the price. Because if we tried to sell down here in this area, that wouldn't make sense, because we would be basically selling the bottom. We would be selling when prices are cheaper. We want to sell when prices are more expensive to make the most profit when we're selling. So what you would do here is, when you see this down here, and after all this aggressive movement downward, you will wait and be patient for price to come back up and get more expensive to balance out the market and sell off here, because this will be a high point. And I'll even draw it, because basically it tapped into this gap up here, right? And it sold off from there. And so you wouldn't sell low, you would sell high. And so the price range, like I said before, I'm sorry I didn't get to that, would be this current, look at the gray arrow, would be this high, which is this red line. This would be the high, and this would be the low right here. Well, look at the bottom of the screen where I'm drawing the gray arrow. This would be the low right here. Okay, so between that high and low I just drew with those two gray arrows, within that structure, the higher you get, that's where prices are get more expensive. And the lower part, which is near the lower red line, that's where prices are cheaper. So when we're selling, we always want to sell high at an expensive price. If you look to the right of your screen where it shows you the numbers, low at that range, we had, where it's highlighted in red, we have 66,455. But if we go up higher to where that top gray arrow is I drew earlier, it's at 66 blah blah, and it's higher. It's way higher than this number. And so you always want to sell high and buy low. And it's the opposite when you're buying. When you buy, you want to buy low at a cheaper price. And so, yeah, that's how I traded. If you're still confused, message me on Instagram. We'll talk about it. You can just talk to me, tell me about your story, show me some screenshots of what your trading strategy is. Mine's really simple. These are the main setups that I take. I have an ebook with visual examples if you're interested in that. If not, it's cool. I have plenty of videos on here. But if you actually want to know like my step-by-step process and actually get a specific answer to what you're looking for, the ebook or messaging me is the way you're gonna is what you're gonna want to do. But yeah, guys, I hope this video was helpful, and peace out.